The headline, of course, heading into the outcome of the Monetary Policy Committee's two-day meeting, which culminates on Wednesday, is that the status quo is expected on rates. At the same time, the accommodative stance of the MPC is also expected to be maintained. The context that we currently stand in is important to understand. A surge in COVID-19 cases since February is causing some concern that the economic recovery that we've seen in the recent past might stumble just a bit, and that is pushing forward expectations of a tightening in the monetary policy stance. That's reflected also in the cooling off of the bond yields that we've seen over the past week and a half or so. So the MPC is broadly expected to support growth. At the same time, the retail inflation as of February stood at just over 5%, and that was a 3-month high. It has, remember, stayed within the comfort zone of plus 4% plus or minus 2% for 3 months now, but core inflation, which removes food and fuel from the basket, has been stubbornly high, and that's something that is going to cause the RBI or in fact the MPC some concern, as a result of which the MPC is going to be cautious in all probability on inflation. Now, will there be an adjustment in the RBI's projection for growth? Unlikely, and that is exactly what RBI Governor Shaktikanta had said at the India Economic Conclave, when he said that a downward revision in the growth was highly unlikely because India is much better placed now to deal with the surge in COVID-19 cases. What's more, an outlook or a guidance on how inflation is likely to pan out over the course of this financial year and whether there's an adjustment in the expectation will be keenly watched. You also have the RBI maintaining systemic liquidity at comfortable levels. That's expected to continue, but any guidance on that front will also be watched out for. What are the brokerages saying? In fact, Samiran Chakravarti at Citi is saying that the focus will be on the stance of liquidity management and the forward guidance there. Sajid Chinoy of JP Morgan is saying that the trajectory of core inflation will play a key role in monetary policy normalization here in India. And finally, let's look at the rationale of the status quo or the expectation of the status quo and why we're saying that. The growth recovery so far has been uneven and the rising COVID cases have been a concern. Headline inflation has been within the RBI's comfort zone for 3 months. At the same time, higher input costs and also supply disruptions could keep core inflation elevated, and that is going to cause the RBI's Monetary Policy Committee some concern.